Welcome to Markets Now. I'm Michelle with Scott Varilek with Kooima Kooima Varilek. We're seeing livestock all in the green this morning, a little bit more mixed trade over in the grains. Wheat is mixed, corn a little bit lower with soybeans, seeing a little bit of a rally this morning. All right, let's start off talking about cattle, Scott, like we normally do. Cattle have been consolidating. We're trying to fill these chart gap areas that we left. You know, are we going to get them filled? And if we do, can we get above those levels?
Yes, and thanks for having me. I'd love to start talking about the cattle. It's a market that's ripe with some news and up near record highs. And yeah, it took a big gut check here over the last couple of weeks with economy news and war news, and we're on the recovery as some of these fundamentals have held strong, in my opinion. And I think it's okay. I think we're looking at these gaps. We're getting really close on the December chart gap that we had left on the way down. And I'm led to believe if we can get that one filled, it's a little bit of resistance right now, but I'm going to look to the months behind it, the deferreds, and think that they can maybe do the same thing. So looking to the December for a little bit of direction here. And I think that's where we're feeling some pretty good strength. I think we like the cash news that's in front of us. We're feeling good about it. And I think that can ultimately kind of get us through that gap and fill it. We're not through it yet, but good to get through this gut check area and get back to, okay, what are we looking at in actual cattle fundamentals rather than the outside market worries?
Yeah, one of the fundamentals I wanted to point out, slaughter only 122,000 yesterday, and that's pretty light. What's going on there?
I'm still leaning on the we're tight on numbers fact. We had this bearish cattle on feed report with big placements and showing that we have more numbers on feed, and there's been a lot of discrepancy over those numbers. But to me, seeing too many cattle moving and packers too close to the knife for me to believe that we've got an overrun of numbers on feed. So I think we're tight. We've got a lot of these northern cattle, Nebraska, South Dakota cattle. They're trying to, packers asking if South Dakota cattle can go all the way to Texas. A lot of sets in South Dakota is going to Kansas. There's a lot of shifting and moving, and you sell cattle for a couple weeks out, and they're calling them. They want them early. So all of those signs to me look like, hey, the packers are close to the knife. They need some cattle, and I don't think that they're out there. So a lot of shifting, trucks moving, and that just the cost from shipping from South Dakota to Texas is just such a big number to make that, them want to do that. That's got to be pretty serious. So I'm going to tie the small kill number to more of that. We just don't have the numbers or showless or tighter up here in the north. And this demand, I really believe we're in excellent shape there. So I think that's carrying us. We've got, like we said, the economy, we've got the Dow Jones turning around. We've got gas under $3 now.
Yeah, that helps.
And I don't know if beef prices are that bad at all to me. So I'm looking at this whole ribeye right here I just got yesterday, $6.99 a pound.
Nice illustration, Scott.
I'm going to feed my family really well this weekend for a very good price. And when you compare that to the price of all the other foods that have rallied, you look at the cost of chicken nuggets per pound and how many of those my kids eat. They live on those dumb things. But, for a low quality ground up part, how much they are. And looking at this for $6.99 a pound, I just feel like this beef demand is there. It's still good. There's still a consumer that wants that high quality product, and it's still at an affordable price to me compared to everything else that you're buying at the grocery store.
No, I don't disagree with you. And now you've started a trend. Everybody's going to be bringing props in is what's going to happen.
Yeah, it's like, whose line is it anyway?
Oh, that's funny. In, right? So you said that you're feeling good about cash trade. We haven't had a lot of cash news here this week. Where do you think we're going to end up developing?
I think northern guys acting like they want to try to ask for higher. There's a group of the real hard-hitted bulls that are saying 190, we want 190, but I would think 188 would probably trigger some of that trade. So you've had that incentive to wait towards the end of the week as the cash is it's in some of these bull markets, if you wait to the end of the week, you can get a better price. So I think those Friday cash trades can kind of, we're going to hold out and wait. We're not ready to take a bid on a Tuesday or a Wednesday. So we're going to drag it out into the end of the week because we think we can be higher. You've got some cheaper feed costs too as well. So I think that these guys will shut the gates if they don't get a price that they want. They're going to be tougher to deal with as far as the negotiators are, they're going to want the higher price. And I think that they can ask for it, rightfully so. They're in a position just to do just that.
You know, you and I talk, or a lot of times the cattle guys talk about feeders have to be the leaders. Do you think feeders can lead us back up out of this correction phase that we're in?
I do think that they can. Feeders need to be the leaders, and they took, a pretty good gut check there over the last couple of weeks, and large breaks on prices in the sale barns. And but I did see a lot of feed yards out there looking for opportunities. So we had some pretty large runs, in my opinion, there. And I still think that the cow-calf guys in the attitude that they want to cash in. They know the market's high. They're not dumb. They know we're at some really good prices, and they've got a nice profit ahead of them. So maybe wanting to take those to town just a little bit earlier. And it feels like to me, a lot of heifers going on feed as well. So I'm seeing them in the cash in mentality rather than, boy, this thing looks like it's going to stay good for a long time, so maybe I better keep my heifers and I want some better prices. I don't see that sector kicking in yet. It's more of a cash in while it's high, and I think that just kicks the can down the road. We're still at a price to where, okay, we're going to get through some of these feeder runs, and suddenly the numbers are going to get very tight. If we've pulled them all early, we got big placements on the last cattle on feeder port, probably get it on the next one too. But then after that, that's when we got to look at, this is a futures market, and I think the numbers are going to dry up a little bit. And some of the guys trying to buy light calves, they are also very aware of that. These feed yards, they're looking to try to get them early because they know it's going to get tighter later. So trying to get them while there's plenty of numbers in front of them. So I think that's what's going to set it up for the feeders to make a nice run later in the year and take us back higher.
Hogs are up this morning. We were down yesterday, pretty good bit of profit taking. We scored some reversals there, but we're back up into some chart resistance. Can we get through those areas and keep going?
To me, I don't feel like we can. A little bit of short covering from a market that was oversold, beat up, large trend lower. And when the hogs shift from a trend, they do it in extreme fashion. But crawled up to a halfway retracement on the Feb hogs yesterday, failed right there. And I think the supply side, increased supply amount of hogs is probably what's going to overhang that market, and you get a key reversal lower. And today we're only getting just a small chunk of that yesterday's losses back. So I still think that market is in for some tough sledding. We're sitting here only on November 2. I think we've got a few months ahead of us yet of some struggle just with the numbers that we have.
Yeah. All right, as we speak, the corn market is kind of pushed back up, at least to about steady status anyways, but we made some new lows here. We broke out of the bottom side of our trading range, and, does that market look like it's just going to continue to see pressure? Is this harvest pressure that we're seeing, you think? Or?
I think that's probably part of the slow bleed lower to the bottom end of the range. It's been pretty tough to talk about, as it's just been very steady and not doing a lot of movement. But I think that bodes well for the market, that it's been able to hold here through harvest. It's the time of year we can put in a low. We're kind of the consensus that these yields are better than expected, and we've got a lot of grain out there. So if it's able to kind of hold in this range with better than expected yields, and I think that it can maybe stay in this range. I don't know. I mean, if it does break out to the bottom side, there's going to be some quick shifting, but I don't know that it's going to be the extreme bleed down. We kind of can put, some of this last year's crop to bed. I know we'll go all the way through till the January report talking about it, but that's not going to be the driving factor. If it wants to break out of either side, it's going to need some of that new news to do it, some new demand news or some poor demand news. End users are feeling pretty good about this price here, because quite a difference in what we were paying for corn last year versus what we're paying now. So as a cattle feeder, get a feed bill yesterday, and you're feeling pretty good about that. I'm willing to stick my neck out there and cover some of this feed and try to buy some of these prices as an end user, because this is a lot better than we were. And I think that's probably what's holding it at the bottom of the range here.
Yeah, that and the fact that, exports this morning, while we're catching up a little bit, we're still like 24% behind where we were a year ago. So that does not help. Soybeans, though, to the plus side this morning, is that all these rumors of China business that keep pushing the market? And, are we also watching South American weather? It seems a little early for that.
Yeah, both of those factors. The China rumor is, that they're going to continue to buy more beans. They're going to increase what they need. That's what's probably propped it up and got it back to, kind of a top side of a range. It almost feels like beans are forming a range here as they've slopped around, and beans are just going to move a little bit more than corn. So I think that's part of the news that we're getting it up here. To me, the options feel pretty cheap comparatively. Yes, soybean options are usually pretty expensive, and they still are, and they're tough to buy, but I still feel like they're at a discounted value from what they normally are. So doesn't give me excitement for a big move in a direction for the soybeans. And you talked about South America. That's a growing season. Yep, they're the top dog here in soybeans, so we're going to get some movement on that. You can find what you want to in that market. As always, you can find an area that's too dry or an area that's getting plenty of rain. So as we move forward in trading South American soybean growing seasons, we're going to have to be better at trying to figure out what that actually looks like, because they're just that big of a player. So that's gonna make for some swings. We know what our growing season does to markets and the grains and the volatility that it can give us, and supply scares. So we'll look forward to that this winter. I don't think it's going to want to be stuck in a range, and the soybeans are probably going to be the leading mover in factor as well of what corn does. If we can really rally some soybeans hard, yeah, maybe the corn can boost off of it a little bit. But if beans can't hold, then corn's probably going to have a tough time with that then.
No, that's a good point you make. And I did see that CONAB had lowered Brazilian production estimates this morning. And I think Dr. Codornier had as well. So maybe that's part of this little push we're getting to. All right. Thanks for joining us. Scott Varilek with Kooima Kooima Varilek. That's Markets Now.